The very best way to buy real estate is in cash. The second best way to buy real estate is with a mortgage. The third best way to buy real estate is with a mortgage with down payment assistance. Either way, you got to buy a house. So you can keep the DPA silent even though you're doing a refinance. That is huge. I don't know any other loan program or down payment assistance program that says that. People will call me like, hey, Major, why didn't you tell me about the 0% down conventional program? This program is literally 2 days old as is the recording of this video. Is the interest rate higher on the DPA program? On some DPA programs, the answer is yes. On this, no. What are we doing? We're taking away your excuse for not buying a home. That's what we're doing. 0% down conventional loans. Okay, let's talk about it. All right, every now and then something comes along that is so impressive that I'm like, okay, this program really is going to help people, especially in this market right now where people are having problems coming up with down payment and closing costs. I have many situations like this. Now, I'll say this, if you're a veteran, you get 0% down all the time on your VA loan. USDA, you can do 0% down. We've been doing FHA 0% down for years on FHA loans. We've got many down payment assistance programs like that, but this is a conventional 0% down payment assistance program. It's absolutely phenomenal. So I'm going to point out some of the great things about it in comparison to other down payment assistance loans that you actually can do with this. So let's get rolling here. So there are two ways to qualify for this program. So two paths that I will say. So first thing we're going to do is we're going to go with the path if you are not a first-time home buyer. Okay, if you're not a first-time home buyer. Now, in this situation, you can be a first-time home buyer or you may not be a first-time home buyer, but we're gonna go through all of these things so you understand how to qualify. Because I put this out on my social media and people at piecemeal questions. So I put together all of the guidelines here as much as I can break them down so you have clarity whether you're a realtor and you're talking to your client about this or you're sharing this video with your client about this program, or if you are a buyer and you're potentially looking at using this program to get into a home. These are some things that you can do. Okay, so let's get going here. Let's take a look at if you are the first-time home buyer or not a first-time home buyer and your credit score is in the 620 to 700 range. Okay, now the other program that I go over, the other way that I tell you to qualify for this, your credit score must be 700. This one, your minimum credit score is 620. So let's start there. Minimum credit score, 620. If you're doing it this way and you're not a first-time home buyer, or you could be a first-time home buyer, okay? Now the DPA. The DPA is a second lien on the home. The DPA, the down payment assistance, does not have any interest that accrues, or it does not have a monthly payment. It's kind of a silent second, okay, as we call it. So the DPA is non-forgivable, okay, but it may be refinanced or subordinated, which means if rates drop, you can refinance and then keep the second lien silent, okay? It allows you to do that. You can resubordinate. If you refinance, you can put the second lien, leave the second lien in position and just do the refinance to drop your rate. Most other DPA programs require you to pay off the DPA if you refinance. By the way, this follows normal Fannie Mae, Freddie Mac guidelines of refinancing. You can refinance, basically whenever rates drop. Okay, so you're not locked into the loan or something like that for a specific period of time. The lender's going to request that you make at least 6 payments, but you're not really locked into the loan for a specific period of time. This is why, part of our business is done in Texas. This is why I'm not a huge T-Shack fan, honestly, because it does not give the buyer, the homeowner, the opportunity to refinance. When rates drop, you can be locked into that loan for 3 years, and rates go down and go back up, and you're still stuck with the same monthly payment. Okay, so you can actually refinance this second lien into the home if you're doing a refinance, or you can subordinate it again and just drop your interest rate on the refinance. Okay, so you may be able to subordinate. The lender is going to give you the lesser of 3% down, or $15,000. Okay, the lesser of that. So if you're buying a home on a conventional loan, and you're doing a $300,000 home, the minimum down payment there is 3%. If you're a first-time home buyer, you're 3%, and that's $9,000 on $300,000. So the lender is going to give you the $9,000 as a silent second of a DPA. Okay, if you're purchasing a home for $600,000, that down payment is $18,000. So the lender is going to cap at 15. You're going to have to bring the additional 3. Okay, all right. Like I said, minimum FICO is 620. You can do 3% down. You can add the additional 2% to go to 5% down if you desire to. Okay. You can be a first-time home buyer or not. If you currently have a home and you currently own one home and you are moving out of that home into another home, okay, or using this program to move into another home, you can be a non-first-time home buyer moving into your second home and use this DPA program. Most DPA programs require you to be a first-time home buyer. So that's another cool thing about this program also. Your maximum loan amount is the conforming loan limit, which right now, if you're in most of the United States, is $766,550 as of today. Next year goes up a little bit, likely. If you're in Hawaii, my Hawaii family, this is you're at 1.149 million. That's the conforming loan limit. You're eligible to do this on single family homes, on PUDs, 1-unit homes, and condos. Okay. Now, if you're doing a condo, you're going to follow the normal condo approval processes that go with conventional loans. All right. So it's still a conventional loan. You still have to deal with that. But if you're doing a single family home or PUD, you can use this program. Now, here is a kicker that may eliminate many people. Okay. All borrowers on the loan must make less than 80% of the AMI. AMI stands for area median income. So all borrowers must make less than 80% of the AMI. Okay. So this is going to honestly eliminate some people. But that is a guideline of it in this section. Wait till I get to the next area if you make more than 80% of the area median income. By the way, all you have to do is Google AMI lookup tool, area median income lookup tool, and it will tell you what the AMI or the area median income is in the area where you are buying the home. Okay. This program allows non-occupant co-borrowers if you're putting 5% down. You'd have a non-occupant co-borrower if you're putting at least 5% down. So if you need to add someone to the loan in order to qualify, you can do that. Okay. Home ownership education may be required. It's a simple class that you take online. It's not a big deal. Now, last thing on this section, if you make less than 50% of the area median income for the area, the AMI, if you make less than 50%, you get an additional $2,500, but that $2,500 reduces the down payment assistance. It does not go towards closing costs or something like that. Again, this is if you are a first-time home buyer or non-first-time home buyer and your credit score is in that 620 to 700 range. There's another way to do this if you're over 700, and let's take a look at that. All right, so let's take a look at how we constructed a 0% down loan if your credit score is above 700, okay? We can also do it this way. You must be a first-time home buyer in order to do it this way. At least one person on the loan must be a first-time home buyer. So if you're married, spouse has a home, and you are not on the deed or have never been on the deed of a home or the title of a home, you qualify as a first-time home buyer. Or if you have not owned a home in 3 years, okay, you are also a first-time home buyer. Now, this is how this process works. First thing is your FICO must be 700. Okay, the file FICO must be 700. If you have two people on the loan and one person's at 710 and the other person's at 680, we got to do some work to get the person at 680 up to 700. So both borrowers must be above a 700 FICO. You're going to get a DPA of 3% or $15,000, whichever is lesser, as in the previous one. It's going to be a non-forgivable lien. Okay, repayment may be necessary if you refinance, but if you refinance with the lender that's giving the DPA, then you can subordinate the DPA. So you can keep the DPA silent even though you're doing a refinance. That is huge. I don't know any other loan program or down payment assistance program that says that. Most times, if you refinance, you're having to pay off the DPA. All right, 0% interest cannot be combined with other DPAs. So I didn't highlight that on the other one. Both of these programs, on this one and on the previous one, cannot be combined with other DPAs. This is 3% down, right? And at least one buyer must be a first-time home buyer, but you can have a maximum of 4 buyers on the loan, but at least one has to be a first-time home buyer, okay? Maximum loan amount, if you're most of the United States, $766,550. High balance area, $1.149 million, okay? That you're eligible, same. 1 units, single families, PUDs, and condos are all eligible. Check with your realtor and check with the loan officer if you want to know whether the house that you're buying qualifies or how it's categorized. If this is the situation, there are no income limits. This is huge. No income limits, but you must have a 700 FICO and you must be a first-time home buyer. And there are no income limits if you do it this way, if you're a first-time home buyer. If you're the other way, you're going to have or be at 80% or less of the area median income. This one, no income limits. Huge. Most down payment assistance programs have income limits. This is amazing. Okay? You cannot have a non-occupant co-borrower. All right. So if you are going to qualify for this program, you cannot add a co-borrower that is not occupying the home onto the loan. Okay. And you might have education, which is an online class that may be required, but small price to pay for the benefits of 0% down. So now people will talk against DPA. Now, first of all, I'll tell you this. If you're buying real estate, which you should do, okay, because that's the way that wealth is built in America, all right? If you can afford to buy real estate, you buy real estate. The very best way to buy real estate is in cash, okay? The second best way to buy real estate is with a mortgage, where you are making the down payment, okay? That is the second best way to buy real estate. The third best way to buy real estate is with a mortgage with down payment assistance. Either way, you got to buy a house, all right? It's just a matter of how you want to structure it. So if you're a realtor, who is this best for? This is probably best for, frankly, if you're sending somebody to a new build, okay, if you're taking somebody to a new build and they don't have the money for the down payment, this is a good program because in many cases, the builder is giving the closing costs. So this is a great tool. If you are negotiating seller concessions and you have seller concessions coming, but still you have a minimum contribution from the buyer, this is another great tool. By the way, people will call me like, hey, Major, why didn't you tell me about the 0% down commission program? This program is literally 2 days old as is recording of this video, okay? 2 days old. This came out in the middle of May of 2024. This is 2 days old. Okay, so we've gone through, laid out, we first the program comes out and then we have to start figuring out how do we communicate the guidelines to realtors and to borrowers on this program. And I will tell you, people will talk negatively about this program. Usually the people who talk negatively about the program are people who don't have access to the program, okay? Other lenders who don't have access to this program because this is an exclusive program of one of my lending partners. So if you want to know more about this, I've done my best to kind of succinctly compile this in maybe 15 to 16 minute video. But if you want to know more about this, reach out. Let's have a conversation about it, see if you qualify. And then let's see how to get you into a home with 0% down on a conventional loan. Now, if you don't qualify on a conventional, yes, we have other programs to help you. What are we doing? We're taking away your excuse for not buying a home. That's what we're doing. There are multiple different programs out there. We literally do hundreds of programs to help people get into homes. And if you want to get into a home, we have a solution where we can help you get in a home. The other question that people ask about this, like, is the interest rate higher on the DPA program? On some DPA programs, the answer is yes. On this, no. You are at normal conventional loan rates with this DPA program. You're at normal market conventional loan rates with this DPA program. So there's a lot here to unpack, but if you need more information, I wanted to make sure you had it in order to understand how this process works. So God bless you. I'll see you next time on Major Money Matters.